We are live.
Okay, Cory, thanks for the report. Welcome everyone. David Kirsten for Quantum Leap Live, and I got my esteemed co-host Cory Not with me, and our guest Jake, who's a tax expert. And Jake is not your ordinary CPA, and he does some very unique stuff for business and bigger business, small business. And we're going to get to Jake in just a minute. But if you are just joining us, Quantum Leap's really about business development and things that are going to help inspire and help entrepreneurs achieve their best business success. And with that, I have top East Bay business coach Cory Not, and mentor to me on a lot of these issues. Cory, if you don't mind just telling us who you are and just doing a little check-in for the day.
Yeah, hey, Cory Not here with Take Wing Coaching, and glad to be here as a co-host with David. And my kind of big focus probably for the next month or so, aside from the different programs we're implementing on Lyft, is how to attract more customers. So that's kind of the whole business development thing. We're going to look at maybe some AppSumo and Facebook advertising and that kind of thing, because we need a pretty steady stream. Yeah.
Oh, good. Yeah, we'll have to connect on that soon. I'm actually right there with you working on that too. And my program Rising Star, which is a collaboration with you, is going to launch tomorrow too. So we'll keep in close touch about that. And I just look forward to that synergy of bringing more people into the sphere, into Lyft, and getting these really great business development tools that you teach and that, you know, purveyors like Jake and all of us in our network use every day. So I'll let you know about that release tomorrow. We'll do a one-to-one later this week. And with that, I want to get right to Jake Birnberg, who is, we've had Jake on a few times before, and he's really a top tax strategist and CPA in the East Bay area. He's won an award from Oakland magazine for the best tax practice in Oakland. And if you talk to him and see what he offers that makes him unique, you really see how he stands out in his ability to help minimize tax burden, but also business structure to get you the optimal business structure for your business going forward on taxes. And with that, I'm going to turn it over to Jake to introduce yourself, Jake, and just tell us who you are and what you do. And maybe we're going to get to a little bit more about what makes you unique, but I'm trying to get to that early on, that some of the unique things that you offer.
Sure. Thanks, David. It's a pleasure to be here. Thank you for having me on again. I'm Jake Birnberg. My company is called Deduction Detectives. We are a full service accounting firm, and we're designed to meet people where they're at. And we take people's goals, their personal goals and values into mind. When I first meet a business owner, I like to ask them, why did they start the business? What vision do they have for it? And what challenges are in their way? And then from there, we kind of can tailor our services to them, because we do a lot of different things here. We do tax planning and tax returns, of course, and tax planning is very proactive. We'll do books, and we'll do full CFO services for someone if they need that. If they're anxious to grow and they need to understand their finances to help them do that, then the CFO, it pays for itself multiple times over, the service. So that's what we are. That's what we do. And, we're really good at it. We offer guarantees. I love meeting business owners and helping them get where they want to go.
Great. And as somebody who really appreciates tax policy myself, I actually worked on tax and budget policy for 20 years. So I kind of know it from the public policy side, but as a small business owner, I really see how it's so important to get off on the right foot with your tax planning. I went through a few different accountants, and I see some of them they won't push you to where you need to be. For example, an S Corp, if you're going to be growing significantly in the next couple of years, you really need an S Corp or some type of structure that's going to minimize that self-employment tax, because you're going to get killed on the self-employment tax. So Jake can kind of take you through all that he's just so knowledgeable about really some cutting edge stuff about what's coming down the pipe. And we always like to check in with him about some current events that are going on. I don't know if you have an update for us, Jake, on the Biden administration and what where we've kind of been there and what we're looking at tax wise.
Well, it looks like a lot of their stuff is really stuck. They did get a new budget approved, I think, or at least it's moving in the right direction. But, you know, they basically are, I don't know if they're going to get this big bill that this Build Back Better bill passed, you know, this infrastructure thing passed or not. And even if they do, at this point, it's been weakened considerably from where it was. But from the big picture, I can tell you there's two things I see. One is government spending is going up dramatically, has gone up dramatically, and is going to continue to go up dramatically. And I think that the debt that we have as a country is, you know, far beyond our means, and that the only way we're going to end up being able to pay for this is by increasing the taxes. So I think long term, you know, my thinking is that taxes are on their way up. We are at pretty historically low tax rates, and planning is really important so that we have some balance going forward. A lot of people have money in pre-tax accounts, and if you have all your funds in a pre-tax account, well, I mean, you know, you avoid taxes now, but you'll end up paying more for them later. So it's really important to look at your assets and make sure that you have some balance. Most people know about the whole concept of diversification, right? So that you're not just in one stock. You want to be in multiple stocks. And then beyond that, well, you don't want to just be in the S&P, you want to be in world stocks too. And beyond that, well, you might want some real estate. You might want some other things that don't correlate with the stock market. And it's the same thing for taxes. You want to have some money pre-tax and you want to have some money after tax, because you want to be able to, when you retire, have a choice where you get your money from. I see too many people who have most of their money in pre-tax accounts. And so if they need to get a new car, they have to take money out of their IRA to buy the car. And then they have to take more money out of the IRA to pay for the taxes that they incurred by taking the money out of the IRA. And then they have to take more money out to pay taxes on that money too. So it's, you got to be really careful. And, you know, I'm working a lot with people to try to get their taxes, long-term tax equations down, you know, by good financial solid planning, you know, around that. So that's really important. You know, I don't have a crystal ball. I don't know what's going to happen in the next year, but I can read the long-term trends and the big trends. And you can see inflation. You can see the Fed is talking about raising rates. So inflation is one of the ways that is thought that you can get rid of the debt, but it just doesn't work that way, because when the debt gets really high and you get this kind of inflation, interest rates go up and that just increases the debt even more. So, you know, just a matter of time before all of that stuff hits, and it's hitting now. So.
Great. No, I agree with it. And I appreciate the quick summary. And I know here in California, we're used to higher taxes. You know, they're always talking about California leading, and we definitely lead the way on higher taxes. So I just think there'd be nice to have more of a leveling out between industries and taxpayers. So you're not kind of penalized if you're in one industry or one person versus if you go into just purely real estate or hedge funds, and you can almost skate entirely. So those are all considerations that you got to know is part of a, you know, talking to a tax planner. So there's different things you should do differently with your business depending on what the tax consequences are. And I think one of the things, or a few of the things that caught my eye with you very early on were this strategy that you use. It's not just kind of preparing your taxes, it's you can go in and look at somebody's business and right off the bat, for example, depending on what they're in, save them, maybe $10,000 in taxes or whatever. Would you mind just telling us a little bit about that kind of assessment that you do to really minimize tax burden?
Yeah, I mean, we do some tax planning. I would say about 95% of the people who I see, and they show me their tax returns, they're not optimized for taxes. Sometimes they haven't even thought about taxes, and they've been getting their taxes done by a professional for years, but nobody really stopped and thought, what can we do for the future? Like the thing is, accountants are trained. When you study accounting, you're trained to record history. This is what happened. This is how we record it. This is how we tell the IRS about it. Well, my degree is in finance, with a minor in accounting. So basically, my way of thinking has always been, what's the best ROI? What can we do for the best return on investment, right? And so when it comes to taxes, there's many different business structures that you can have. You mentioned one of them, S corp, but that's just one of many. And they each have their own tax forms. They each have their own rules. They each have, everything. And so basically, we try to look at people's situations, because there's a lot of things that you can do to save taxes, but you can't do them on April 15th. You have to do them, at the beginning of the year, beginning of the tax year, somewhere in the middle of the tax year, to take advantage of things while you're in the tax year. And then the following year and the years after, then you start seeing the benefits, the rewards of that work that you do. So, I look at each individual holistically. I look at their business, their families, their investments, their goals and values. We design a plan that's going to work for them, not just now, but usually the plan is there for many, many years. And we do provide a 200% ROI guarantee for people, that you got to save at least twice as much as you paid for the plan in the very first full tax year. I've never had anybody come back to me because they didn't save that money. And when you look at the ROI over years, it's really, really intense. It's 5-10 times what you spend for the plan, because you can have a tax plan working for you for years. S corp is a good strategy for some people. It's not necessarily the best strategy for some people, and it's not necessarily the only strategy. And every strategy has a series of costs and benefits, and we try to look at all of that for somebody in their particular situation and see what we're going to do, what kind of structure we're going to recommend. And we take into account all the different deductions that are or are not available for each of those different business structures, because they all affect your taxes differently.
Great. And Cory, I was going to turn it over to you and just give you a chance if you have any comments on things you've learned about tax planning. I know you recently had a big real estate transaction, and as a business owner for a long time, you probably went through some trials and tribulations with taxes, I guess.
Oh, there always are. Yeah, I don't even want to talk about them, honestly. Fortunately for the real estate transaction, you learn more about what COVID has done to tax planning agencies, and just I've been dealing more with assessors' offices and tax offices and so on that are county and so on. They're slow. They are just slow to do anything now, and there may be some benefit to that. I don't know. Obviously, Jake would have much deeper insights in on that. But one thing I've learned is, you don't have to take their answer as gospel, right? Especially when dealing with like real estate taxes and so on, there's a lot of room where they may be saying it's going to be this, and you're saying it should be this, and look to appeal those kind of situations. That lots to do with the IRS and that kind of tax planning. But I used to know people who would actually get involved in property taxes just so they could get in and help people with their other taxes, right? If you got a big commercial property, have you thought about what your assessments are? And that is always worth reviewing. It took almost a year and a half for the assessor's office to reassess the properties in Oakland. And I didn't actually get the notice of the reassessment until after we sold it. So now I'm going to be waiting for them to adjust the tax form because we don't owe the full amount. Anyway, it's just kind of, COVID has just slowed them down. They're all working from home and not doing much. And it's not necessarily a bad thing for us.
And they can't communicate with each other. And
right.
one hand doesn't know what the other hand is doing and stuff. So the IRS is like that too, they're working from home, they're tremendously backlogged. And, there's no sense of customer service or anything because, you're going to be a taxpayer whether they treat you nice or not. So,
right. Yeah. So the answer is, because I hear about people, it's like, oh my God, my tax bill was so huge and blah, blah, blah. And, you find out what they're earning and it's like, okay, it shouldn't be nothing like that. So it's always, get help because it's definitely a different environment than it used to be. And even then it was always a good idea to get help.
Yeah. Somebody came to me recently and they owed about $100,000 in federal and state taxes. And they were getting levied and garnished and they were just really getting beat up. And we managed to, I looked at their situation. I was like the third person they came to, and I was just able to look at it, take it apart, and get about 35,000 of that removed and put them on an installment plan so that they're just good.
Right.
So you just have to know how to deal with the agencies, and have to know what to say and when to say it. But still, that took forever to get accomplished,
right.
because they are very fragmented.
We're seeing that in a lot of places. So how would you say you can help businesses restructure for an upcoming sale or reorganization?
Well, look, when you want to sell your business, you got to really think things through before you sell it. I don't usually recommend people go from zero to, okay, today I want to sell my business. You got to really think about it. You got to have some advance notice. Think about buying a business or buying a stock for that matter, things that people are, I just want to bring this to something that you're familiar with. If a company is growing and has really good prospects ahead of it, you'll pay more for that company, right? If a company is stagnant, you won't. You're going to pay less for that company. So, if you look at the stock market today, because the stock market, you're buying shares of a business, right? That's what you're buying. So Tesla right now is valued at about 185 to 1. So that means for every dollar they earn, if you buy their stock, you're getting a share that's basically about $185 for each dollar of earnings that they have. Okay, that's not even the dividends they're going to pay out. That's the earnings that they have. You're paying 185 times for that. A more ordinary example is Pfizer, which is a drug company, makes vaccines and all kinds of drugs, right? And they're valued around 21 times their earnings. And then Ford is worth just less than 4, right? And then US Steel is maybe 1.6. So all these different companies are worth a different amount based on the company and the industry and what they're doing and how fast they're growing. So, okay, so here, let's say you want to sell your business and you've been coasting along, making the same revenue and the same profit year after year. Well, somebody will pay you for that business, maybe, if you're, first of all, if you are the business, there's nothing to sell, but if you have a product or service, and if you leave and there's still business going on, then you have something to sell. So we'll take that as a given, but it's not a given. And I often work with people to try to create something beyond themselves that they have to sell so that when they want to sell their business, they can. And the other thing is that we try to get them to have some growth. So if we can get a company to grow by about 25% year over year, we can usually get a bump of about 50% of their multiple. right? The multiple is how many times. So if you have, Cory, if you make $50,000 a year, there wouldn't usually be much of a business to sell there, and you get a multiple of 2, well, that would be $100,000 for a business that's earning $50,000, right? That's your multiple. So we want to try to bump that multiple. If you can grow your company by 25%, and somebody sees a company that's growing 25% a year, well, they'll bump their multiple by at least 50%. Okay, so now instead of getting 2, you're getting 3 times the value of your business. And now instead of getting $100,000 for that $50,000 business, you're getting $150,000, but it's more than 150 because you've grown by 25%, right? So you end up getting almost twice as much for your business if you can grow it by 25% and the multiple goes up. Okay, so now a lot of people think, well, how am I going to grow by 25%? Okay, well, you can hire Cory, and Cory can help you get more clients. And that's one thing that will help. But there's other things also that can help you, because it's not just a matter of being bigger, it's a matter of being more profitable. Okay, you want to grow the bottom line as well as the top line. So like, you know, I had a client recently, and they wanted to put some of their merchandise up on sale. They thought they'd get more sales if they cut their prices by about 8%. And we went through an exercise where I showed them how much they'd be making if they cut their prices by 8%. And then we went through an exercise of, well, how much would you be making if you actually increased your prices by 5%? And they ended up making more by increasing their prices by 5%, losing some customers, and still making more money by increasing their prices by 5%. So it's not a straightforward thing. Now, everybody knows, or most people know about SMART goals, right? Specific, measurable, attainable, relevant, and time-based, right? Now, when you look at your accounting statements, that's the measurement, and it's time-based, right? And it's very specific, because there's so many different elements to your financial statements. Most people don't understand their financial statements at all, but your financial statement has all kinds of information that's there that, if interpreted correctly, can tell you what strategies to do next, what you should be doing next to help your business grow. Okay, and so there's a lot of information there. And growing by 25% is not a matter of doing one thing different and trying to hit a home run. It's about getting a lot of singles. It's about growing in different areas by 3 or 5%. And those different areas kind of multiply each other, and you end up with a 25% growth. And it's far from impossible. It's very, very doable, very attainable to increase your profitability by 25% in a year if you start looking at your books really carefully, and you start looking at how you can make changes to increase your revenue, to increase your profitability, and do all of that. And then you can get that 25% growth. Once you have a 25% growth, as I say, your multiple will go up, you'll get a lot more money for it. And then once you get the money for it, well, how do you keep that money? Okay, so that becomes a tax planning issue for that. Now, 1031 exchanges used to be applicable to businesses. So if you had a business and you sold it, you could do 1031 exchange and go buy another business. Can't do that anymore. Except for, you know, there's a few loopholes where they still allow you to do that, but it doesn't really give you the same break as you got before. So, but I am, like, right now I'm in the process of writing a book on the 12 alternatives to 1031. And so many of these types of things that you can do to cut the tax bill very significantly in some cases on a business that you're selling. So I'll give you one, for instance, that is an installment sale. Installment sales have been around since the very beginning of the tax code in 1913. And that's because there weren't any mortgages back then. So if you wanted to buy a farm or a house or anything that was kind of expensive, that cost more than a year to pay for, probably the owner was going to kind of give you a loan for it. And that's really out of favor now, because a mortgage is much better. And the reason it's out of favor is if you sell your business to somebody and they don't know what they're doing, they can run the business into the ground. And then all of a sudden, not only is your business, are you out of, you've lost your capital as well. You've lost your collateral. But there's ways to do that with a intermediary so that you can then have your money and have sold the business and take it out on a different schedule, or get it as a loan or something, so that you don't have to pay the tax on it. We don't have time to really go over that very clearly now, but those are the different types of things that we look at when someone is selling a business.
Perfect. I just wanted to say we are just about at time. If you don't mind just telling us who your ideal client is to work with, and then we'll have you back later this year to dive into some more stuff probably.
Well, okay. So, we look for business owners who, want to do one of any number of things. People who want to keep more of their hard-earned money out of the IRS's hands. Okay, that's of course a really good prospect. People who want to grow their business, people who want to understand their business and want to have a CFO in their corner so that they understand what their numbers are telling them, so that they understand what the next step is to do. And so we have a number of coaches, attorneys, dentists, contractors, chiropractors. There's a lot of different industries, but people who want to really succeed in business need to have a financial advisor, financial arm to do it. So CFO services and tax planning services are really super important in order to do that.
Great. And, I appreciate you being my top referral source in this category. I just love your mindset and, really an aggressive approach to helping your clients. So thanks for conveying that, and coming on. We'll be seeing and talking to you soon, Jake.
Okay, great. Take
Bye,
care.
everyone.
Bye.
Thank you, Jake.